One of the most important skills for success in trading is understanding the concept of a trend. At its core, a trend reflects the dominant direction in which the market is moving over a given period. It may seem like a simple idea, but mastering it is essential for making informed and profitable decisions. Why? Because, as the saying goes, the trend is your friend. When we talk about trends, we can categorize them into three main types: uptrend, downtrend, and sideways trend. An uptrend, also known as bullish, occurs when prices show a pattern of higher highs and higher lows, indicating that buyers are in control of the market. Conversely, a downtrend, referred to as bearish, is characterized by lower highs and lower lows, signaling that sellers are dominating. Finally, in a sideways trend or range, prices move horizontally without a clear direction. Identifying and understanding a trend is the first step, but equally important is interpreting it correctly. This is where technical analysis tools come into play. Indicators such as moving averages, trend lines, the Relative Strength Index, RSI, and the MACD can be incredibly useful in identifying trends and confirming their strength. For example, a simple moving average can act as a filter to determine whether a market is in an uptrend or a downtrend. However, identifying a trend is not enough. Successful traders know how to adapt to trends rather than fight against them. This means entering the market in the direction of the prevailing trend and avoiding the temptation to guess when it will reverse. While predicting market reversals might seem appealing, this practice carries a high level of risk and often results in losses. Another critical aspect is understanding that no trend lasts forever. Markets are dynamic and influenced by various factors such as economic events, central bank decisions, and market sentiment. Therefore, traders must watch for signs of trend exhaustion, such as declining volumes, price reversal patterns, and divergences in technical indicators. Risk management also plays a vital role. Even the strongest trends can experience temporary pullbacks. Setting appropriate stop-loss levels and diversifying your positions are essential strategies to protect your capital. In conclusion, understanding trends is not just a tool, it's a mindset. Learning to identify, follow, and respect trends can be the difference between an average trader and a successful one. The next time you look at the market, remember that it's not just about watching the charts, but interpreting what the market is trying to tell you.